Hey guys, welcome to the Investor's Guide of Memphis Real Estate. I'm your host, Dean Harris, and as always, I'm with Douglas Skipworth. How are you?
Hey man, I'm doing great.
We're bringing you this podcast to give you the boots on the ground knowledge to be a successful real estate investor here in Memphis, Tennessee. Please like and subscribe to the Investor's Guide of Memphis Real Estate on our YouTube channel, Spotify, Apple Music, wherever your Facebook page, wherever you want to listen to it. Our show sponsors are listed on your screen below. We would not be able to do this show, run our business without those guys. That's Triumph Construction, River City Title, Corlin Financial, CrestCore Property Management, and Will Griffin over at Griffin, Clifton, Everton, and Mashmeyer. I help buyers and sellers every day. Dean at CrestCore.com. Shoot me an email. I'll be happy to help you buy. Get set up with our buyer profile link. I've got a QR code that sometime through here we might splash on the screen, but if not, shoot me an email. I'll get that over there to you. Today, we're going to dive right into, this is a special request today. Okay. We had we've asked you guys in the prior podcast to email in any request of show topics. The one thing you and I joke about this, the one thing that we kind of struggle is the word, but we have to sit down and get real intentional about is the show topics. Mm-hmm. We think we know what you guys want to hear, but we're not exactly sure. So if there's ever anything that strikes a chord, email in Dean at CrestCore.com. Today's topic struck a chord, and I thought we would do it. So we had a client come in and email me and ask me how we manage, monitor, maintain our portfolios, and from kind of an A to Z perspective. And obviously there are things that each individual investor does that they might not disclose, but there's some things we'll talk about here today which I don't really know that I have any. I mean, this isn't a super secret, but so we'll dive right into it. So how do we manage our single family rental portfolios? The first thing that I look at, and then we'll just kind of ping pong back and forth. The very first thing I pay attention to every day, the very first, are my vacancies. In my mind, it's the most dead of dead things. I've got a house that's sitting there. I've rehabbed it. I put some money into it, big shiny nickel, and it's just sitting there staring at me. So my obsession every day is the vacancies. If I have seen anyone falter, fail, crash their portfolio, it's because they didn't pay enough attention to a vacant unit. And then it got to be 2, and then it was 4, and then now they're 8, and very few people, even with a 50-house portfolio, can rehab 8 properties at one time. You're talking $100,000 that someone needs to have in cash. So you get that far behind. Now I just refuse to do it. So for me, every morning when I get to my office and I'm starting my day, one of the things that pops up is at CrestCore we use PropertyWare. Yeah. So one of the things that I pop up is our PropertyWare program, my owner's portal. Mm-hmm. So I check that out every day, and I start to look at, I go to my vacancy link and I start there. And then it's, then you say, well, then what do you do? Well, it's, then I'm trying to figure out, hey, where is my rent correct? Right. Have I communicated with our leasing department? Are there any incentives that I can offer or should offer? Is there some appliances I can put? Literally, I go through each one. Now, every day you don't have to go through and look at a house and say, do I need appliances? But, a systematic check of things that you need.
That's my number 2. I always look at from a big perspective. I look, what's my portfolio balance? How much money do I have today? And what's my P&L looking like? Mm-hmm. How much rent have I collected? What are my expenses? That's number 1. Yeah. Number 2 is vacant properties. Mm-hmm. Where are they? Where are they on the rehab? Where are they in marketing? All of the things you just said. And coupled right with that is notice to vacates. Like they are part of, because in my mind, if somebody has told me they're leaving, that's a vacant property.
100%.
Although, and we can talk about this later, if they put notice to vacate, the first thing we do is try and keep them. Those are like red alert if somebody sends it up as notice to vacate. But we'll get to that. So talking about vacant properties.
Vacancies, even to the notice to vacate, man, that's my, I get asked all the time, hey, do you want to go up in the rent, or do you, how do you know they're coming up for a renewal? Yes. And of course, if I'm under rented, which I don't believe I have anything, it's typically like, right now, let's stay the same to $50, whatever it may be. But the biggest thing is don't move out.
Don't move out.
Because no matter
if
what,
if they've paid on time, if they haven't been crazy, if the property, we do a rehab, a renewal inspection where we go and take photos, do a massive checklist to see how they've kept the property.
Yeah. So vacancies are the biggest concern. You're kind of you're second in there, but I think we're both kind of saying the same thing.
Absolutely.
It's like we're going to that vacant dead money.
Absolutely. Go in and look at that. And then go in, and we have a status at Property, like you mentioned, for CrestCore Property Management. They use a number status of like from vacant all the way through to marketed and rehab and rented. And so I'm like checking those numbers, making sure the days that they're in numbers, I'm making sure everything's moving as it should.
One other thing to point out, I'm not just, I say dead money, but there, behind that, there's an example or there's a definition of that dead money. I mean, when you have a portfolio of rental houses and you have debt, like I do on most of mine, a lot.
Sure.
When you've got a debt service on there and you're worried, when I say vacancies, what vacancies really means is profit or not. Because if I've got a portfolio of, however many houses and I have 10%, 15% of them vacant, that's not all my profit every month, but it's the large portion of it, right? Because you're paying your bills first with the majority of your rent that's collected. You got to get everything taken care of first. So when I say vacancies, the reason why you and I and most investors probably hone in on that, and the reason why I'm saying that's dead money is because I can pretty much get everything else handled. It's my vacants that help me make money, right? My vacants don't pay the mortgage.
No, that's what I was going to say. It's
my
not,
good tenants are taking care of my business.
It's not. I think that, and people should know this. If not, hey, this is it. It's like the mortgage payments don't stop when tenants move out. So it's when that would make things different, right?
Wow.
But it's like the mortgage payments keep going, and you have to have that cash flow, and you build in vacancies, you build in collection issues into your model, but.
Yeah, but I'm here to tell you,
stress test things unnecessarily.
I also don't know anyone that's got a 50-house portfolio that sticks to those numbers. That's just not the case. Like you might book 10% in there, but you're not. If you have some vacancies, you're not going, I budgeted for those. No, you're not. We're all sitting there just like white knuckling like the vacancies. I don't care if you've got, and that part of it hadn't gone away from me, by the way. I'll just admit that.
I don't know how
from when I had 2 or 3 to where we're at right now, the white knuckling on the vacancies, isn't it? You can ask the property manager. That's all I'm thinking about.
Yeah. Oh man, I look at that occupancy percentage every day.
Oh man.
So I mean, the flip side of that is like I've got a red and green. It's either in the red, like I'm above the vacancy percentage I want it to be for that portfolio, or I'm below. I'm either red or green. I'm either happy,
that's right,
or I'm like, oh my gosh, I got to get this
I have to
back
get these
into
occupied.
the green.
Monthly collected rent is where I go second. So I look at what we've collected. I don't typically, in my notes here, I think I wrote, I don't usually check this. 14th or 15th of the month is when I really start honing in. I think rent's late on the 5th.
Due on the 1st, late on the 5th, late fees kick in after that.
Yeah, so I try to give them a little time after that because if you start early in the month and you have a large portfolio, you're just going to run yourself ragged worrying. So I give it some time, let the dust settle, and around the middle of the month, I give leasing enough time to call and collect and do their job, right? I learned early on.
Yes.
Worrying everyone from the 7th to the 15th, you get a lot less answers. Focusing in on the 15th, 14th, and 15th, there's a whole lot more that's developed by then. I'm stressing them out less, and I'm stressing out less. So I go ahead to the 15th, and I want to see what's collected. And I'm really good. Half of my portfolio is super strong on being paid up by then. The other half, by the 15th, I'm collecting 20% of it. By the 21st or so, we're down to 5. You know what I mean? So it just kind of it tinkers down all month. But monthly collected rent, because of the debt service that I have on mine, I've got to make sure, obviously, that we're covering there. I'm a little different. I do 15 years. Some people say, like, golly, how could you be covering? Most of my stuff's on 15, like all of it really is on a 15-year note. So
3 and 4% interest because of
3 and 4% interest. So
it
so
changes things.
Yeah, it certainly does. So
lower prices.
Can't do it now.
Yeah.
So
it's harder.
The last 4 or 5 I bought, I put on 20-year.
Same.
It's just tough.
Yeah.
I mean,
but this isn't short-term game. So it's like, okay. Yeah.
I don't. Yeah, that's a whole nother podcast.
But
vacant rent. I'm sorry, but monthly collected rent. That's where I go.
And it's good. Yeah. That's my first or third, depending on how you look at it. Like I said, portfolio balance, P&L is number 1. So that to me is collected rent. Like I'm seeing how much rent came in yesterday, how much expense went out. But then third is what I call collections. And so I think it's a little bit more of kind of what you're talking about here. It's like individual properties. where are they compared to their monthly rent? Where do they typically pay in the cycle? So if they pay on the 15th with a late fee and that's what they do, that's what they do. So there's no reason to get upset about that.
You ever feel like an analyst during that time?
Yes. Yeah, you're looking and thinking, it's
I'm
like,
trying to break down when you feel like a data analyst. I'm like, okay, this person paid the last 6 months on this 3-day range. Okay, we're still on par for their behavior. Like,
and that's when you look. And so for me, like you, it's like you can look at the 1st, at the 5th, at the 10th, 15th, 20th, and know generally your percentage collected. And again, whether you're in the red or the green, like are you ahead of schedule or behind schedule? Are you on track or off track? And it just helps.
Yeah.
Helps settle you, helps you know when you got to focus, what you need to ask everybody to do.
Now, I don't change my desire to get the rent earlier, but it does help me understand a little bit. Now, if those folks would just get a little bit ahead, you could avoid a 10% rate increase. That's the only part I hate for them because I don't really care about the late fees, right? We don't have budget on late fees. I'd rather than pay the rent versus that late fee. So that's the
and typically late fees go to the property management company because they have to pay people to collect, all the effort that goes into that. Not to I think property management, they've said this a million times, they would much rather not have the late fees and people pay rent on the 1st.
As a property
and never have
owner,
to worry about collections.
I'll tell you this, as a property owner, I feel the same way. I make a little money on late fees, in another area, but it's like I would much rather have them pay the rent on time and not have to deal with that.
Think about it, fiddle with it.
It's not nearly worth the time, effort, and energy it takes.
No.
So
that's not your business. Your business is collecting rent,
that's
paying
right.
your mortgage.
So those monthly vacancies, monthly collected rent, we're tracking down people that haven't paid. The third thing that I typically go look at is my outstanding maintenance. I try to go look and see anything that's working at the time. Usually I'm getting, not daily, I don't have dailies, but weekly. I definitely have maintenance requests weekly. So that's a process in itself. If you really want to do a good job, this is a very important area where I've seen investors in the past cost themselves a lot of money because of the lack of attention. And I've seen some investors really save themselves some money because there's so many, when you do maintenance and you have maintenance calls and the people that go, you're not there with them. You're listening to what they're telling you, and you need to have that trusted source to go there. If you are that investor that just, you hear it and you just say, okay, fix it, you might catch yourself spending more money than what you absolutely have to spend, right? You're out.
Yeah.
There you go. So more than you absolutely have to spend. If you monitor this a little closer and your homes and your properties, and I would even suggest keeping a log.
Of course, yeah.
Go back into wait a minute, I just did this 7 months ago, right? Because you're not gonna, as your portfolio grows, you're not going to remember.
Yep.
I couldn't, so I stopped. It was about 1.5 years ago. I was like, I'm not remembering this. I thought I did plumbing on 123 Main Street, right? So if you chart it in that, so what I did was I created a folder for each one of them. So now I can figure out exactly what happened. Oh, that came too soon. That must be a tenant issue. They're causing it, right? Like, let's pass that on to them. So maintenance, I study my maintenance more than I ever have. It's one of the areas where I feel like in mine, it could be 30 or 40% higher if I'm not maintaining like attention on each one of them.
Yeah. Yeah. And I'm with you. That's where I go. I look at requests. I look at quotes. I look at what's scheduled and just understanding, and then try and get ahead to where you're going with preventative maintenance.
Yeah.
And how do you get roofs, water heaters, HVAC systems? So, because those are your big expenses.
Yeah. I moved into a program about 2.5 years ago where when I'm looking at these, instead of, when someone says, hey, the toilet's clogged, I can't get my toilet flush. I've tried to plunge it out. I can't get. So instead of me calling the plumber and saying, hey, let's get that toilet unclogged, I have been spending, and it's cost me money, but I have been spending more money. Like, hey, snake the line, maybe replace the whole toilet, figure out where that came from, and because what I was catching myself is the larger the portfolio was getting, they were coming back and back for the same crap, $85 every time you show up. So I made
same crap.
It's
That's
the
fun. The same
same
crap.
I know.
That's funny.
No
That's
pun
funny.
intended.
Yeah, that's funny.
It's the same crap as it was the other time.
Yeah, it came right back up.
It just came right back up. No, but that's the point. It's like, hey, it's $85 or so to show up at the house every single
right.
time. So with
That's good.
everything,
With
you know.
that's my point about the preventive maintenance and keeping the log. I think that's excellent advice that I went to years ago. I do it on a spreadsheet.
Yeah.
And just keep it logged. So hey man, I did this, I did that. Here's when I put on this, here's when I put on that, just to see how things work.
Yeah. The next thing that I typically do, and a lot of this will just start getting kind of vanilla, but after the 15th, when I've gone through the rent portion and I've exercised what I'm going to do there, whether it's filing for an eviction or sending a letter, whatever we're going to do, and I've done it. I've handled my late rents for the month. Now, from the 15th to the 20th, I move over into making sure the bills are paid. I have set up all of my mortgages on the all of my loans to be automatically withdrawn. Yeah. So I know that those loan payments and stuff are coming in at a certain date. It comes through every time. The second thing I'm trying to make sure that I'm paid is just everything else.
Yeah.
Can I cover everything else?
Yeah.
Again, I've structured mine differently. I'm on shorter, payments, so my payments are higher. But for me, I'm sitting here. Can I cover everything else? I got my monthly insurance. I have a maintenance bill, and that's why I'm studying that so hard, because I don't know what that's going to come in at. So insurance, maintenance, what else? What are some of the other monthly expenses?
If you escrow for taxes,
okay.
I don't know about you, but it's like typically I have the property management property where I pay all of the maintenance expenses as well as taxes, insurance when they come due, if they're not escrowed, but then pay the mortgage from the bank account. So the owner draft. So they're two separate things. So that because ideally you don't have a mortgage and it's just running the properties off the rent.
Yep.
So so I look at them a little bit separately, but that's why I'm always looking at my balances, making sure my balance that's going to transfer at the end of the month is going to cover the mortgages the next month.
That's right.
So and have the balance over here of safety just in case this doesn't, for whatever reason, cover it because you had a major rehab, you had a lot of things go out, you didn't have vacancy, so you can turn around and cover your monthly mortgage payment from this.
I never thought with my personality that I would ever become what I've become with data analysis and what you just said. Yes. Man, I can toggle money and right. mortgages right. and rent and insurance and whatever else. I mean, it's amazing. How it's coming in, and you're just sitting here monitoring and managing. And, there is, you say this on this podcast a ton, but there is no such thing as passive income.
Yeah, there you go.
It just doesn't work, right?
Yeah.
Like those checks are coming in every month and blah, 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 blah. But like you've heard of what we're doing. How do it was a great topic from the listener and client of ours. He's a great guy. Brian's a good dude. But, managing our single family rental portfolios, I mean, there's a lot that goes into this. And anyone that tells you that it isn't, or, they weren't expecting this, they just didn't do enough homework and research to understand what they were getting themselves into. So the last thing that I do is focus on all my delinquent tenants. Anything that's caught up. I set up Cash for Keys program. A lot of people don't know what that is, but man, I haven't had an eviction gone through one in years, if I have even gone all the way through one. We offer a Cash for Keys program. It was super relevant back in 2008, 9, and 10. When the mortgage companies and no one was paying their mortgage or could pay their mortgage, mortgage companies were coming in saying, "Hey, here's $2,500. Be out in 3 weeks. Yeah. Use this for your next down payment. You don't have to go through the eviction." So I'm setting those things up, and I'm working on just any current outstanding evictions or anything that's I just kind of clean up stuff with your portfolio. It's kind of the last thing I do, and honestly, by the time you get done with that,
it's time to start over.
It's about the first again.
Yeah, it's time to start over. Yeah, I do that. I do a deep dive weekly and go through all this daily at a higher level, deep dive weekly. But I also look at renewals because I want to get out ahead of renewals, doing the renewal inspection, like I said, reviewing the rent rates to see. And that is on a monthly cycle, but a weekly, I think kind of what you're saying, daily, weekly. But then I look at a P&L on a monthly basis, pretty high level, and an annual basis. So anytime, and do evaluation on the property twice a year.
Okay.
Just to keep kind of from what else do we do from managing the portfolio besides kind of managing the portfolio, but kind of zooming out to be like, hey, is this profitable where I want it to be?
Yeah.
To cover my mortgage, and then is it is the value. What's the value doing? Because that's like that in that calculus, like you said, all of a sudden, if you're like, wow, the neighborhood values are increasing, the property, maybe it's not cash flowing like I wanted it to, but man, I've got a lot of equity in there through appreciation and debt pay down. So this is this is where I want, this is good for where I want to be, or it's not doing what I want it to do. It just gives you it gives you another kind of perspective to monitor.
The annual things that I will look at are my insurance premiums and rates.
Good. Oh,
Shop that around.
Yeah.
Obviously the IRS and tax portion that we just, that comes around. I don't do this every year, but I like to bid out some of the lawn service and some of the other stuff. I mean, from time to time, you just want to make sure that, hey, you're staying
competitive.
Yeah.
In the market.
I'm not one, if I build relationships with vendors, I'm not one over a couple of dollars a yard to get rid of somebody, but I just want to make sure that I'm not totally missing the boat on the insurance too. I just want to make sure with all of it. So that's kind of it. And to me, we laugh about this. I always wonder if the topic is relevant when we come in here. I was like, I wonder if anyone thinks that evaluate what if they're going to care, what we're talking about. But when it comes to single family and how we manage and how we evaluate. But now that I'm thinking about it, we've had more and more requests on this, like, hey, what does your day look like? And from an investor standpoint, this is what the month looks like. It's a constant analysis. I do think, if you have 3 properties, it's not quite as in depth. If you have 500 or whatever that, the investor might have, it's a lot more intense, but these are generalities, and these are things that you would keep on any rental portfolio. Yours in your market, or if you're not here, whatever, might be a little bit different. Might be more, you might have some things that we don't do or do here, from market dependent, but, if you're managing and you're looking at, or you own a portfolio here in Memphis, these are some basic things that I would look at.
Yes, absolutely.
Anything else?
No, that's great.
Hey,
love
if
it.
you guys have any questions, Dean@CrestCore.com. I help buyers and sellers every day here in Memphis, Tennessee. If you have any show topics that you'd like to add, Dean@CrestCore.com, and that QR code to get on our buyer list where you're receiving the houses that we're sourcing. Shoot me an email, Dean@CrestCore.com. I'll get it to you. It might flash up here on the screen. I don't know, Alec, when you figure something out. Okay, see you guys next time. Appreciate it.